Hello everyone, welcome to Macro Market FX. Today we're going to discuss about the US dollar futures traders is going to be the DXY futures, the Forex trader is going to be about the Euro USD. As you also now know that this is the most pair traded by a lot of people worldwide. So let's take a look, let's deep dive into this pair. And what you're looking for this pair for the Euro USD is going to be a buy position, for the DXY futures is going to be a short position. So let's start looking at this pair by looking at the macroeconomic data. When I make the macroeconomic data, you're going to look at things like the central bank policies, you're going to look at the GDP, you're going to look at the consumer confidence and employment. So currently, as you also know, both countries were decreasing their interest rates, whereby the US was up from 5.25 right now is to 4.50, but they're in a neutral rate due to the ongoing tariffs issue, whereby the euro are still decreasing the interest rate, where currently the interest rate is at 2.4%, and they have signaled a further decrease in the interest rate due us to boost the economy, to support the economic growth compared to the US, where now they are data dependent. And last week there was a Fed meeting whereby the central bank policy, the chairman Powell, said that there is a short-term risk of inflation going high and unemployment due to the tariffs, and they're still looking. So currently the US central bank is at 4.5%. Is in at the neutral state, whereby the euro is at a 2.4, whereby the euros they are stating that they will continue. There is a huge probability of the next meeting to continue decre- decreasing their rate. So this is a dovish stance. So this will boost the economy of euro compared to the economy of euros, will support business growth, will support consumer confidence and everything, so that there will be a lot of money flowing into the euro more than flowing into the US. And there are things like the tariffs which are imposed by the US. First, when these tariffs were imposed by the US, a lot of people, a lot of analyst people, thought that they are going to give strength to US, but the numbers were way big. As you see, the China issue was 145, so this technically lead to the US US dollar to devalue due to, you also know, the US is a big import of goods. So these tariffs are going to hurt the US consumer confidence. We'll see later around here. So this will also lead to the dollar devaluation. This will also affect his GDP. So let's take a look at his inflation rate. As you also know that the euro inflation rate target is at 2%. Currently, the headline is at 2.2, the monthly is at 0.6, and the core is at 2.7, whereby the core is a good guide of whereby the central bank use in cutting rates. So you can see that the euro inflation rate is still at above the 2%. That's why the central bank, the ECB, is struggling to reduce the interest the interest rates so as to cope with the inflation. Let's take a look at the US inflation rate, whereby not later on there's the April there's the April inflation rate report of the US. So you have to take a look at it. Currently, the market data shows that the headline is at 2.2, 2.4, whereby is neutral rate is neutral rate, also let's say its target inflation must be under the 2, whereby its headline is 2.4, is monthly is a negative 0.1, its core is at 2.8. This is still way huge for US dollar, but compared to the data, how it's going, there is a slight increase of inflation in the short term, as said last week by the Fed chairman Powell, due to the uncertainty going on of the tariffs issue. So this gives a favor to the euro long and the DXY future short. Let's take a look at things like the GDP and the PMY. Okay, let's take a look at GDP. The first quarter GDP euro flash came out at 0.4. This is a good sign showing that the economy is decreasing. You can look at the COT, you can look at the composite manufacturing PMI, the service PMI. You can see that the manufacturing PMI of euro is still in a construction zone because it is below 50. Anything above 50 shows that the economic is good, but it's still below 50. But it is increasing from 46 to 49. This shows that the euro economic zone is rebounding from its recovery. Look at its composite. The composite is an overall. It's at 50.4, which shows that is in at a neutral level, but due to the economic data ahead, the eurozone will increase compared to the USD. Look at the service PMI, 50.1 is still in the neutral level, but is this there's a growth. Look at this GDP. Let's compare it then to the let's compare it to the USD. Look at the USD. Well, USD, all PMIs show that they're above 50. There is a neutral level, but look at the composite PMI, which is the overall. I said from 53 to 51. This shows that there's a decrease in the US economy. Look at the GDP, guys. The quarter one GDP, -3, -0.3. What does it show? That the US economy is declining, as you can see from the composite 51 to 53 to 51. Although it's still in the expansion territory, but it is decreasing. You see, manufacturing is still stalling from 51 to 52. Now it's at 50.2. You can see the service from 54 to 51. Yeah, the economy, US economy is still in a good zone, but there is decreasing. You can see, look at this GDP. So this shows that there's a big opportunity in the euro USD, a long-term opportunity. As you can see, you must learn how to trade like the banks, guys. I'm giving you opportunity to see how the banks do and how the banks intervene in the market. Let's take a look at the consumer confidence. As I said, the current economic situation, the US is a big importer of goods. So the big imports which the US is going to charge the other countries which are importing goods to the US will have these tariffs will go past to the consumers. So you see, from January, if the US consumer confidence is above 100, that means the US is in a good zone. But look, January it was at 71, down to 64, down to 57, down to 50. And all this month, this is due to the tariff issues. So that's why we also see the central bank chairman say that they are continue assessing the US economy. You can see this 50, you can link it to the GDP. The GDP is a negative 0.3. So this shows that there's a big opportunity to the dollar to devalue compared to the euro. Though the euro is still also its consumer confidence is still below negative 16.5. When the euro consumer confidence is above zero, that means it is a good position. Also, the euro consumer confidence is decreasing, but compared to that data, there is a growth ahead compared to the US. Compared to the US. So this shows that there is a big opportunity to buy the euro SD or the forex traders and sell the DXY futures to those who are doing future contracts. So let's take a look at the volatility. Volatility. The volatility as a trader, investor, you must know the whereabouts of the volatility. Currently, the volatility, the large speculators. When I mean the large speculators, I mean the big financial institutions, the hedge fund, the banks. They're increasing. They're increasing their VIX positions, open contracts, and they're above the zero, which they're buying. This is due to the all the tension going on, the Indian Pakistan issue, the tariffs issue. As also know this week there is a meeting in Switzerland between the Chinese and the US concerning the tariffs matter, whereby according to the news right now, they have agreed on a reduction of tariffs up to 30% US to China and 10% China given to the USD. So this shows why the large speculators are increasing their position on volatility. So you must know, but volatility doesn't affect anything. You must know when volatility is a risk on, a risk off. But if you know the the data from a central bank policy, you will understand more. Let's take a look at the currencies. Let's take a look at the euro. Euro. Where you can see the euro, the large speculators, they are increasing their euro position. You see, they're above the zero, they're increasing the euro contract. This means that a lot of money is flowing in the euro than is in the USA. Let's take a look at so they are long. Also, this will lead to the market to have a strong euro compared to the USD, and this will lead to the value of the dollar currency compared to. Let's take a look at the true USD index. You can see, guys, through this index, there's official that the large speculators are short on the true USD index contracts, means that the inflow of money is not compared to the inflow of money in the euro. So what does it mean? That a lot of things will be in the euro, and strength will a lot of strength will be given to the euro. This will also affect the market. The euro USD will go up, and the DXY futures will go down. Let's take a look at the USD index. USD. Let's take a look at the USD index to see how the large speculators are holding up. You see also the USD index. You see they are official short, guys. They have decreased their long position. Now they are short on the USD index, meaning that they are selling the USD index. What does it mean? Means that it will also lead to the market to the XY futures to start going down. The US index will start going down, and this will make the USD to go up. As you can say, these pairs will move together. It's one thing. Okay, let's take a quick look to the let's take a look to the technical analysis. Well, this is the technical analysis. The US dollar index, as I said, back in 2021 when the US were rising interest rates, it was a good buy position from 89 to 116, where it respected the key deviation levels. Where I still remember this trade. Around I entered around 90 and I hold it for almost a year up to 116, and it respected the key deviation levels. So this is another opportunity to hold this pair for a long term, where official I mean around the 108, and I'm targeting my area around 94, 94. So let's take a look how you can benefit from this quick technical analysis. As I can say, a lot of traders, guys. I know what retail traders do. A lot of traders will look left, something like this. Will look left, something like this. Price bounce back at this area, price bounce back at this area, price bounce back at this area. So what they're expecting here to come and retest around 100 and off go. But that doesn't support this. Then this is where a lot of stop loss will be taken, a lot of liquidity will be taken out from the retail traders and passed to the big banks. So what will happen here? So what will happen on this pair? Something will happen on this pair that the market will bounce back from 101. As you can see, it is in a moving average, a strong volatility moving average of 101. This is the weekly time frame. I look at my analysis from a weekly time frame, a monthly time frame, and small from a daily time frame. They show a huge trend move. So price will be around here. It will bounce back and head directly to the 94. 1994. But around here, it will take a lot of stop losses around here. It will take a lot of stop losses that people look left, as I said. But the official, the market, this price will go down here. So a lot of stop losses will be taken around this area, around this. A lot of stop losses will be taken here because a lot of traders will look left. But this is an opportunity for the DXY futures traders to short the dollar on one down to 94, a key moving average of 0 weekly. Let's take a look at the let's take a look at the Euro SD for those who are trading Euro SD. Take a look at the Euro SD for those who are trading Euro SD. This is the Euro SD, whereby this is an opportunity for those who are trading Euro SD. As I said earlier, I'm also in the Euro SD around 1.04, and I'm taking it all along to 1.2, whereby this is an opportunity to find an entry around 1.1107. This moving average, this horizontal line here, and you're taking it all along to 1.2. As I said, the macroeconomic data shows everything about this. So this is a good opportunity to buy the USD for the forex traders and short the DXY futures for the future contract traders. As you also see, a lot of signs shows that this is going to be a long position. Let's take a look at the USD 2-year yield bond. This 2-year yield bond is a leading indicator of the central bank policies. As you can see, back in 2001, it rose around from 0.1% up to 4%, and this also shows indicator that the Fed were rising interest rates. So currently, right now, is at 3% up from 5%. It is decreasing. So this shows that the US are this shows that it will lead to a weaker dollar due that the US will lower its interest rates. When the US lowers interest rates, always the dollar always devalue. So this is an opportunity. This is one of the indicators which shows you where the US dollar is heading, where the US dollar it's heading. Okay, there are few things I want you to take a look at. Is the is is the interest rate, guys. Take a look at the interest rate. As I said before, the euro interest rate is at 2.4, and the US interest rate is at 4.5. This means that there's a different interest swaps. So when you're holding this pair, you have to pay the broker. I know most of you guys doesn't know about brokers, doesn't know to choose the good trading platform, but I'm going to make a quick overview about this, and I'll make a video someday about this. You can see Euro USD. Euro USD, according to the interest rates, US has a big interest rate than the euro. So this means when you long this pair, according to data, you are going to pay the broker. The broker is going to take something from your account, a negative 8. So this is according to your loss size which you have entered. Compared to when you short it, is going to be a positive 4. But right now there's no room for 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 shorting the USD because the data doesn't support it anymore. So yeah, we are going to buy this pair. The broker is going to take something from us, but there are ways to hedge this. There are ways to hedge this risk. So if you need to know more how you can hedge this, please, I have keep my Upwork link on my comment section. Please click the link, work with me to know more about this, how you can look at the market as a big hedge funds, big larger banks, how to trade like the larger banks. And please, guys, don't forget to subscribe to my channel. Please subscribe to my channel. Let's grow this up, this community, this macro FX community. More videos coming, a lot of education videos coming to 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 show you a deep understanding of the forex market, future market, and the stock market and the option market. So, guys, this is an opportunity. Well, keep in mind today, later on, there's a news of the US CPI. So take a look at the news. But have I said this is a good position of you guys to enter? This is a good position for a long-term position to enter for the DXY future traders up to 94, for the forex traders up to 1.020. So take a look at this opportunity. Large retail traders will look left and buy because you see every time prices are here, they also both. But you can see this there's no room of going up and normal. This is a short-term trend. So take a look, and I hope we get to work more together. As you can see, guys, please don't forget to subscribe to my channel. More videos are coming. Subscribe, like my videos, notification, switch on your notifications so whenever I drop a video, you have your notification signal showing that I've dropped videos. These videos are more educational, more long term, and it will show more about the trading community and a lot more. Please don't forget to subscribe to my channel. I've kept my Upwork link on my comment section. It's also in my bio. Please, if you want to work more about me concerning the stocks, what stock market pairs you need to hold them long term, please contact me. Future traders, seasonality trades, and please don't forget to watch my gold video. It shows this is a main seasonality trade on gold. I've explained. Please take a look at my video. You'll benefit from it for this main seasonality trade. So thank you, and I hope to see you another time. Have a great week.